Good evening, ladies and gentlemen. We've got two speakers tonight, Professor Tim Congdon and John Redwood. As you know, the subject is the European Union and the credit crunch, and I'm pleased to see so many of you here. Tonight, I feel that we could have no better person to speak to us on this subject than Professor Congdon.
Good evening, ladies and gentlemen. There's the Groucho Marx joke that there's no point joining a club which wants him as a member. And I think Britain and the Eurozone is a similar kind of story. They do want us as a member, but there's really not much point joining the club. Because we are not in the Eurozone, we're lucky enough to control our own interest rates, to have our own exchange rate, and to be able to manage our public debt and our government finances according to our own circumstances. And all of these aspects of economic policy are denied to our neighbours that belong to the Eurozone. The IMF has just produced a forecast that we're going to have the largest fall in output of the major economies in 2009. Well, we'll see. I don't actually agree with the IMF. And I think that what's going to happen is that some members of the Eurozone over the next, they're in macroeconomic trauma at the moment, but things are going to get much worse. And I want to talk about one or two of them in the next few minutes. I'm going to focus, in fact, just for the time being on Ireland, because I think this is quite an interesting case, rather unfortunate case in a way. The Irish have had, of course, a very good period in the last 10, 20 years. But at the moment, they're definitely suffering because they, unlike Britain, are trapped inside the Eurozone. They can't devalue. They can't further reduce interest rates. It's been reduced quite a lot already. But critically, they can't themselves carry out these policies of so-called quantitative easing. Ladies and gentlemen, this will work. It will bring the recession to an end. I'm afraid in our neighbours, it's very difficult to do. The reason is that they've got this currency zone with one currency and over, I lose count, 15 or 16 governments. And so if you're buying back government securities, the question is, which government securities? Okay? And all this depends upon negotiation and haggling. Are there any big winners out of what's happened in terms of reputation for running a banking system out of the events of the last 2 years? I think there are some big winners. Some countries have indeed done well. And who are they? Canada and Australia. Canada, no banks are in trouble in Canada, none at all. Australia similarly, there are one or two issues, but there's really no problems there at all either. They have essentially the same systems that we would have had if we hadn't joined the European Union in 1973. The same kind of things they inherited, much the same kind of strong central bank, the central bank involved, regulated the banking system, easy communication between the finance ministries and the banking system and the central bank, all these things that we used to have in our own country. They're lucky because they were not contaminated by joining the European Union. We're lucky that our currency didn't join the Eurozone. I think that was a great achievement of the Eurosceptic cause in this country. We also, I think, would be even luckier if we're outside the European Union altogether. But there we go. Thank you very much.
Good evening, ladies and gentlemen. Tonight, with an audience like this, we do need to discuss not just the British, but also the European response to this crisis. It is topical tonight because we've had the Turner report published today, looking at the origins of the crisis and giving us regulatory answers. But when you come to the Turner remedies, I think you should be very sceptical, most especially the Turner remedy, which says that one of the answers to all this is a pan-European super regulator who can sit on top of all the national regulators. If you can have national regulators asleep at the watch, surely, ladies and gentlemen, it would be equally possible to have Euro regulators asleep at the watch. If you think you have too many boxes to tick and forms to fill in from the national regulator, don't you think it might get a little tedious to have another set of them from the European regulator? Lord Turner is a man of his time serving the government of his choice. It all looks rather old-fashioned and backward-looking to me. I don't think this is a crisis of unbridled capitalism that we're living through. It is a crisis in the interactions between some rather large and not very competitive banks on the one hand, and the regulatory system on the other. It is a crisis of money supply and money control. But this was not a crisis of under-regulation. Never has so much regulation been passed. Never has so much regulation been heaped from Brussels onto Britain. And never has Britain so willingly surrendered to so much Brussels regulation. Indeed, Britain so liked the regulation coming from Brussels that it always went the extra kilometre. It always went that, oh yes, I can speak the language, ladies and gentlemen. But you'd have thought they would have concluded that this massive panoply of mortgage regulation they'd introduced was completely useless. Never have mortgages been as regulated as they are today, and never have we had such a grave crisis in the mortgage market as we have today. They were regulating the wrong thing in the wrong way. They didn't regulate the cash and capital of the mortgage banks properly. They did, unfortunately, over-regulate the process. It did not stop a single dodgy mortgage, if only it had, because there are too many dodgy mortgages, but it did impose a barrier to entry for new competitors. It did impose extra cost. It imposed extra hassle in the way we've become all too used to from this administration. So my concluding comments to the government are these. Do not believe that you can solve the banking problem by subsidizing and feather-bedding the banks. You have to get them to face up to the truth, sort out the mess, generate some cash, get their costs down, start to find profitable business to replace the unprofitable business they've written in past years. And above all, they've got to sensitively and intelligently work their way through all those loan books at the moment where the situation is still deteriorating. Do not believe, government, that transferring bad debts from shareholders to taxpayers solves the problem. You've still got to work it through and create a strong and sensible bank that is in a good position to lend more and behave sensibly. Oh, government, understand there is a mighty anger in this country if taxpayers' money paid by people of modest means struggling to keep their jobs and their businesses alive is seen to be frittered on very large salaries, very large bonuses and very large pensions for the very people who've presided over the losses in the banking sector. And oh, government, if you really believe that a load more regulation along the lines that has gone so horribly wrong in the last 11 years is going to be the answer to the banking problem, we do have serious difficulties. Regulate less, regulate better. Be tough on cash and capital and prudential issues for those who can credit create and those who take in client money and have to look after it, but you do not need nearly as much of the other regulations that have not stopped any of this crisis, and in a way meant the regulator was looking in the wrong direction, looking for the wrong problem, which allowed this problem to become so enormous. And finally, for the Bruges Group, there is absolutely no need to have a mezzanine level of regulation at EU level on top of national regulation and in addition to any international agreements that may result. There may be a case for trying to get global agreements on some of the main principles and some of the main items, although I fear that the Basel agreements were part of the problem. They produced a capital framework which most demonstrably did not discipline the banks in many jurisdictions. But do not believe there is a need for this mezzanine level. It would be damaging to Britain, damaging to the City of London, unnecessary, and would not stop a single bad mortgage, let alone a mortgage crisis.